Hello and welcome to another Illinois Chamber of Commerce video focused on the progressive tax that's going to be on the ballot in November of 2020. It will do away with a very taxpayer-friendly flat tax and replace it with a progressive or graduated tax that we think will be terrible tax policy for both consumers and businesses alike. So just a quick recap of a previous video we've done. A lot of people can claim that Illinois is out of the mainstream when it comes to states and their tax policies. Nothing could be further from the truth. Illinois is in the majority of states that have a flat tax or an effective flat tax. So first of all, there are 9 states with no income tax whatsoever. We include New Hampshire and Tennessee in that because they don't tax your paycheck. They do tax some other forms of income, but we include them in there as they are also moving away to no income tax whatsoever. The other category is 9 other states have a flat tax just like Illinois does. And then there are 10 states that have a tax that we think is an effective flat tax. That is that the rate comes in at an income level so low that it's effectively a flat tax for most of the residents of their states. For example, Missouri has a flat tax that begins at $84.24 in terms of income, $8,224 and a top rate of 5.4%. We think that's a great example of a state that has an effective flat tax that the proponents call a graduated tax. So let's go ahead and move on to the issue of Illinois actually having a very, very fair tax system right now. So let's go ahead and take a look at 5 different categories of income that people pay in Illinois. And compare them to the percentage of income they generate for themselves and the total economy and the percentage of taxes that they pay through the income tax. So the bottom third, not a whole lot of income there, 4% of income, but they only pay 2% of taxes. So the bottom 30%, which we define as adjusted gross income of $25,000, but net income comes in at 4% of total net income, 2% of taxes. That's not very much. So if you're thinking about the lowest end of the spectrum and trying to be fair, think this. 2% of all income taxes get paid. And again, keep in mind, this is in the context of a U.S. tax code, federal tax code, where 45% of Americans pay no income tax at all. So we don't think this is a very fair burden. The next 20%, $25,000 to $50,000, they get 9% of income, but they pay 9% of taxes. That's exactly what a flat tax is supposed to do. Distribute it equally. Whatever you make, you go ahead and contribute to state revenues. The next quintile that we look at is $50,000 to $100,000, 18% of income, 18% of taxes. Go down to the next one. $100,000 to $500,000. This is where people start to think that this is, the wealthy. But these are entrepreneurs. These are family-owned businesses. These are people that want to be successful in the state of Illinois, and they're paying their 38% of income, but just a little bit more in taxes, 39%. The highest 1%, we always hear about the 1%. These are really the successful people that have the biggest ability to move their money or themselves out of the state of Illinois. And they're the ones that are going to get hit the hardest by this progressive tax idea. 1% pays 23% of income, and that's definitely they're being successful, but they pay 24% of taxes. So the 1% that everybody talks about, they're already paying nearly a quarter of all Illinois income taxes, just the 1%. So we think that this is really, really important to point out that these are the folks that can go ahead and move their money, move themselves out of the state of Illinois if you go ahead and really punish success, which is not what we want to see. So there are some alternative solutions to dealing with this issue, and you don't have to go in the Constitution. You don't have to go ahead and punish success with a progressive tax. There are two things that other states already do that Illinois should go ahead and take a really close look at. The first is the Earned Income Tax Credit. This is the tax credit that eases people from dependency on government programs into the world of work and productive, getting a paycheck, productive part of the economy. Right now, Illinois has an 18% of the federal tax. That means a portion of the tax credit you get at the federal level flows down to your state income tax return. Right now, it's 18%. 29 states have an earned income tax credit, and Illinois is right in the middle of the pack. Other states, even including Wisconsin, our neighbor to the north, has a maximum rate of 34%. So if you really want to adjust that bottom level and make sure that lower income folks have an option and a tax incentive to move up the ladder, then you can look at Wisconsin that has a maximum rate of 34%. That's a much better policy option than going into the Constitution and pushing out success from the state of Illinois. Finally, the standard exemption. That's the exemption that everybody gets to take off of their income right from the beginning, except for those that make $500,000 or more. They get no standard exemption already. But when it was enacted in 1969, there was a $1,000 exemption for every taxpayer and dependents. If that had kept up with inflation, CPI, in 2019, it would be $7,000. So there are a lot of states that go ahead and have a much more aggressive standard exemption. $1,000 in 1969, it would be $1,000 today. Where is it right now? $2,275. That's another way to go ahead and address an issue, to go ahead and keep the flat rate, the benefits of the flat rate, but still go ahead and have a structure that's a little bit more graduated in a way, again, that doesn't chase out success, doesn't punish small businesses, and we think that's very important that we should have that kind of conversation as opposed to amending the Constitution to institute a progressive tax. So we look forward to talking to you the next time.